The housing market hibernation that continued into the spring might have just ended thanks to a prod from the Bank of Canada.
I don't know how many hundreds of thousands of people are on the sidelines right now, but the main thing they're waiting for is lower rates and to be able to get into this market, and they're about to get that.
Despite last month's interest rate cut and more likely on the way, the Canadian Real Estate Association has now downgraded their 2024 forecast. Home prices are now projected to only rise 2.5% nationally, a near 50% decrease from previous estimates. But the short-term signs show a rebound in June.
Sales actually outpaced listings for the first time this year, so months of inventory fell, meaning the market tightened for the first time this year, and prices were up, albeit by a measly 0.1%.
That slight increase in sales comes at a time of nearly record unaffordability. The average Canadian would need to spend nearly 61% of their income to buy a home, according to RBC, leaving many people waiting for further help from the Bank of Canada.
There's a certain amount of sideline sitting. There's no question about that. It will take more cuts to see a substantial change. I think you will not see any kind of meaningful change until there's a full 1% reduction.
The next rate reduction could come on July 24th, when the bank will announce their latest decision, with most major financial institutions predicting another cut to help current variable mortgage holders and those coming up for renewal.
We know people holding mortgages are feeling the squeeze. We know there is concern about higher interest rates when they renew their mortgage.
For those who can't afford to buy at higher prices and rates, the situation isn't much better for renters, with payments to landlords going up 7% year over year, an average unit now costing nearly $2,200 a month. Mackenzie Gray, Global News, Ottawa.